I, and as you can see, this session is being recorded. So if there's any part of this conversation that you missed, you can always go back later on to
Mhm.
review. So you're more than welcome to do that. So just know it's being recorded. But to give Diana an idea of where you are right now, I want to start with a quick poll question, with a quick poll. And the question is simple. How would you describe your credit score right now? So, how would you describe your credit score right now? Do you think it's like awesome, excellent, amazing, or not sure? I have no idea. I haven't checked it for a couple of years. Or, you know, got myself into some trouble. I need the help. I need, want to, bring it back up. Numbers are not exactly where I want them to be. So let's see the poll. Oh, that's pretty awesome. 65% or so of you um, are doing very well, are doing very well. So that's wonderful. Uh, about 33%. Here we go. See? So the majority of you are doing well, but there's always room for improvement. Doesn't mean that it's totally awful, but some of you want uh, to improve it. So you've come to the right place. You've come to the right place. So thank you very much for your responses. But remember, this is your opportunity to ask questions. So add your questions into the chat and we'll get to as many as possible. But now I want to, welcome Diana. Bienvenida, Diana. And let's start with the very basics, Diana. Um, really, explain how the credit, how credit scores work and why are they so important? Why should we care about them?
Yes, I love that question because it's starting from the beginning, right? We need to understand why do we have the credit score. It's a way for the financial institutions to understand us financially. It's a almost like a trust indicator. They unfortunately don't have the privilege of knowing us. So the only way that they can get to know us is with this credit score. For example, when we don't know somebody, sometimes we ask, hey, what do you know about this person? Is this person a good guy? Well, that's what the credit company wants to know. Are you going to be able to pay the loan that that you're asking for, right? So it's important for the company to have something so they could understand you and who you are. And this is unbiased and everybody is measured the same way, which is important and critical when we're asking from a lending company to give us a loan. And based on that, how good or bad our credit is or how trustworthy we are, that will give us that credit score.
Yeah, and I know, Deanna, that you're talking about buying something, right? And it's wonderful because depending on how good your credit score is, they might even up your limit, which is, in case of emergencies, in case a major situation comes up, you want to have, possibly a higher limit, right? For emergencies, it's perfect. But the other thing is just people, like she was saying, right? This is the way that people know about us, right? This trust thing. If you're going to rent an apartment, right? If you want, I mean, your landlord's going to want to know. It also affects even your rates that you get on some things. The higher the score, you might get better rates, interest rates on credit cards, on other things. So really, there's so many things, and I'm sure even considering how accessible, I'm sure even employers, if you're looking for a job, may check your credit score just to make sure that, that they're hiring the right person. So anyway, credit scores are super important, of course, to buy something, but for every part of life.
Yeah, it's basically your reliability. How honest are you? Right? Which honesty is pretty important. And they want to know, are you going to follow through? Are you a trustworthy individual?
And what are the main factors that affect a person's credit score, Diana?
One of them is payment history. They want to understand how long do you have built in your credit. If you've had a long history of good payment history, well, that is going to affect your credit score as opposed to someone who's just beginning, because we can't really gauge the reliability of a person, the person's ability to pay their responsibilities. So just like trust, it takes time. Just um, payment history also takes time. So longer that you have in your history, the better. And the better um, things that we do, then the better our credit will be.
Yeah. And Dana, you were saying that, right, our history of paying.
Mhm.
At what point, for example, we always pay on time. It says it's due on the first, and we pay on the first. If we pay on the seventh or so, at what point does it start affecting our credit rate? Is it 1 month, or do we have to be chronic before it actually starts affecting our score?
Well, it's important to think of things as a habit. So when we start building habits, we need to start thinking things. If something is due on the first, we need to start creating this habit because that's what credit history is. Although you may have 30 days until that company will then report that you have not made a payment, I would lean into not really thinking about things in that way. I would lean towards if it is on due on the first, then please make the payment on the first. And it's about being reliable. It's about making your payments. And the longer that you're able to do that, the better for you. The other thing is it's really important to think about your history is also how leveraged are you? How much of that um, credit that you are given, for example, if you're given $1,000, how much of that $1,000 are you using? That actually really matters to them because they want to understand your judgment. Are you a good judger of your budget? Are you overextending yourself? Because if you are, there may be a probability that you won't be able to pay your payments eventually, right? So we want to be mindful of what our balance is and try to keep it as low as possible.
So Diana, so let's say if we have a credit card and you pay every month and you don't have any debt whatsoever, uh, is that better than having, let's say, some debt and then you pay it, every month on time? Uh,
If you're paying your debt every month, that is absolutely wonderful. That is exactly where you want to be. They want to know how you and your budget and your finances are in relationship to what is owed. So if you have a zero due every month and you pay, you obviously are making good decisions, good financial decisions. So you're more likely to get a higher credit score because you're a reliable person. So the lower that is, closest to zero, the better off you're going to be.
So the
Absolutely.
habits that you're talking about are, one, of course, you said pay on time, right?
Correct.
Have the habit of always paying on time. And of course, I know that sometimes, things happen, but if you tend to forget, we have technology available, reminders and post-it notes or whatever you need to remind you, but pay on time. And the other thing you mentioned was uh, to watch our limit, right? Not to go be like, not to reach the ceiling of our limit of what we have in terms of our credit limit, right? Not
That's
to
very
overextend,
important.
not to
Not
overextend ourselves.
overextend. Yes,
Okay.
because we eventually want to get to a space where credit is then they make it higher and higher, our limits, because we may be in a situation that we have an emergency and we may need to buy a car. We may need to do things that we not necessarily planned out. So when those things happen, then we're able to have great credit, which then means that the percentage that is the loan percentage will be much lower for you. So then the payments that you will have monthly will also be lower. This is why it is so important to be so aware of your credit. And it is something that you want to build, and it isn't something that it's going to necessarily be fixed by next month. It is something that is history and just behavior that you're going to build for yourself. It's just habits.
Diana, you mentioned that F word, fixed, right? Uh, for those of us who have problems with our score that we think it's not as good as it should be, or we got ourselves into trouble, how can we, fix it? How does that work? How do we go about repairing our own credit score?
Yeah, so that's a very important question. This kind of reminds me when I was younger, I didn't even like to look at my credit score. It's almost like the scale. I don't want to see how much damage I've done. So I'd rather not look at it. Um, which isn't necessarily the best way to do things, right? Because I want to understand what's the damage. Have I gained 20 pounds or have I gained 5 pounds? It's the same thing with your credit score. You want to understand how low it is so then you can build a plan based on what's your reality. Because I remember putting things away and not looking and not just kind of thinking it away. It really didn't get me anywhere. If anything, it got me to a worse position. So acknowledging that you have to see this every month, because unfortunately there are times that the credit companies have things wrong, and unfortunately, nowadays, there's a lot of people that may be using your social security. So they may be using this information, and you may not even know that somebody is using your credit. And looking at these credit cards, looking at your credit score will give you what the current status is.
Fraud is a huge concern for many of us falling victims because, oh my gosh, identity theft and just fraud is just a huge nightmare for many of us. Diana, you were talking about checking our own credit score, right? How often should we do that?
Um, well, you could do it every month if that makes you feel comfortable, but certainly every 6 months. Um, I typically think if I am going to I'm going to be buying a car, or there's going to be a big expense coming up, I want to really understand that maybe a year ahead and see, okay, where's my credit? And then check it every month, because then it really does matter if anything comes in that it's not yours, because it is going to take time to fix that. But being healthy with your finances, check it every 6 months, 3 months, and that will give you a good sense even how you're doing. Because sometimes there's little things that we do that will bump our credit score down. For example, doing a hard check is something that we want to think about not doing often, because our credit score does go down when we do a hard check. For example, when we go and apply for a credit card, the companies will check, and that's considered a hard check. That is certainly not something that you want to do very often. So it's you checking it, seeing where you're at, seeing that you're in a good place. And once you feel comfortable because you've taken control of your finances and your credit, then that's a good time, right, to move forward with anything that you may want to buy.
And Diana, with us checking our own score, does that affect our rating? I know sometimes if you're going to go after a major purchase, right, they don't want too many inquiries into your credit score. But with us ourselves checking our own, does
No, no. There's a lot of banks, for example, there's banking that you could check your credit score, and that's not a hard check. That is different than a company checking your credit. You could go in and check your credit and see where you're at, and it will tell you where you're sitting. But if you go to a car dealer and they're checking, then that is going to count against you. So checking for yourself is great.
perfect? And and you've been I mean, we've been talking about uh, all the benefits of having a strong, a good credit score, right? That we get better rates, possibly on insurance, on credit cards, so we can get loans, we can up our credit limit, right? Employers and jobs, yeah, landlords who check our scores. But you also mentioned even just to protect ourselves, to know that nobody's using our Social Security, our name, and right? That we're not,
Correct.
we, without our knowledge, we may become victims of fraud. And they kind of bank on that, right? That you don't know, and they'll just, yeah, kind of use your information.
Absolutely. And it happens more often than we actually really think about.
I
Um,
know.
and I will always advise somebody to check and not be ashamed. I have had clients who have been impacted by this, and there's months and months that they know that there's a problem and they don't say anything. Because unfortunately, when somebody has been scammed, people feel taken advantage, and there's sometimes shame behind that. And this is why we have people like me. We are financial advisors. We're here to help you and help you grow and give you those tools to make you successful. We want to change your trajectories. We want you to have a healthy relationship with your finances.
And Diana, a question, we've been talking about loans and right, why it's so important. Um, what should we look for before applying for a loan? And what are some of the warning signs on these predatory lenders, right?
Yes.
Especially those of us that may not have the right credit score. What are some of those things?
Yeah, so you should always do your homework and the agency that you're looking at for the lending agency. That's just look them up, see their history, look up if they have the Better Business Bureau will let you know their history. For example, if the person in front of you that you're speaking with has this sense of urgency and this pressure, um, anytime in sales or any kind of conversation, when someone is pressuring you is because they're not allowing you to ask questions or what think about what you're doing. They just want to get you into the emotional reaction. So they just want to give you this sense of urgency and just act now. The other thing is I always think about is really listen to your gut. It is amazing how many times I have listened to my gut, and as I progress through things, I'm like, that is right. There was something in my gut that told me there was something wrong. Usually, when I get that gut feeling, I start asking questions. And then I start understanding, how is this person responding to my questions? Is this person being condescending? Is this person trying to just rush me out of there? Also, anytime somebody guarantees approval, I think you should be a little leery about that, because no one can really guarantee something unless you've gone through the process. Those are a couple things that, from the top of my head, I could think about.
And on the radio, I sometimes listen to these commercials, and they'll say things like bad credit, no credit, come in and we'll give you a car. I can only imagine what those interest rates are or how they're working, right? But I mean, desperation, and those people, of course, who just kind of prey on the most vulnerable.
Yes. And it's important to be able to sit down and be level-headed, read the information, go home, get yourself, become aware about the loan and be able to come home, read it. If you have questions, you should feel comfortable to ask questions. No one should ever make you feel uncomfortable because you're asking a question. You're not an expert and you shouldn't be expected to be one. For me, anytime that I visit an expert and they're making me feel inadequate because I don't know the answer, that's always a red flag for me.
Yeah, they don't have time for you to answer your questions. You're right. You're right that they just kind of, don't worry about this. Just go ahead and sign and
Yeah,
yeah. Yeah.
very scary. Don't do it.
Um, Is there such a thing as good debt? Or is there a formula? Is there like a percentage of how much debt we should have to have a good score, or anything that you can tell us, like how, at what
Yeah.
point try not to over exceed?
Yes. Well, there is good debt because there's debt that is going to give you the payment history. So you do need to have a credit card. I wouldn't have more than three credit cards, for example, because again, that's another way of telling the credit agencies that you're overextending yourself, overextending how much money you need to have access or how much money you need to loan, for example, get a loan every month. So having three at most is a really good place to be at. Keeping your numbers down, hopefully at zero, how much you owe every month. It's amazing to do. The other thing is, the other type of good
Debt?
debt, excuse me, is owning a home, for example. That is
Hmm.
going to build equity for yourself, right? So that's a good loan, even though it is a big loan. It is a loan that is going to build equity for you and is going to build a legacy for you, as opposed to buying a car. That's
Yeah,
a necessity, but that is not going to build a legacy, and that is certainly not going up in its value. So typically, when we think about loans and things being valuable, is it going to build equity for you? That's a good type of uh,
loan to
debt
have.
loan
Yeah,
to have.
yeah,
And also education is another one, right?
yeah.
Because we do have to go, some of us did go to college, but that's a good debt to have as well.
Yeah, and some of these also help us with our own taxes, right? They kind of,
Correct.
we can claim on our taxes. No, you're absolutely right. And I and I know you're mentioning three credit cards. I mean, it seems like now every single time I go to some department store or whatever, they'll say, "Do you want, open up a credit right now and you'll get 10%." I mean, if I did that, I'd have like 50 cards. It's incredible how they try to lure you.
I actually really love that question because I've gone with my husband and he's kind of interesting guy. He's like, well, go ask my financial advisor. And they start laughing. He goes, no, really, she's my financial advisor. Because it's not common that you would think, you know, um, that I would be the financial advisor in this conversation. So I always remind my husband that they actually want to get you in the interest because they'll take away $100 from the cost, but they're going to give you like a 17 to 23% interest. So they're automatically the first month. If you don't pay it on time, which is what they're betting on, they've already made up their money. So, and it just becomes a cascade and it's kind of reflects the ability to make good financial decisions. You don't need to get that credit card. You could pay without that credit card. So there's absolutely no reason to get that. Although getting that discount sounds awesome.
Yeah.
Um, I tell my husband, then take away one of the pants and you already got the discount. So it's like, if that's what you really want, you could give yourself an automatic discount. I'm like, don't get a whole credit card. So there's just different ways to kind of think about things. But yeah, that's such a good one. Thank you for that. It's a great
Yeah.
example.
We have people joining us right now, so welcome. Don't worry if you've missed part of this conversation. We're just, chit-chatting here with Diana Ashbash. She's a licensed financial advisor. I'm Patricia Perez. I am AARP's state president emeritus. But don't worry if you didn't miss anything, because this is being recorded and later you can watch this video to see what you missed. But this is an opportunity for you to get answers to your questions from a pro. So just write them out in the chat. We'll get to as many as possible. So Diana, I'm going to start with the questions. We have a question. Do all three credit rating companies use the same low to high scores? What does each use? For example, is it 850 max or 900 max?
Yeah, some of them really they vary a little bit, and that's fine. You because in this question you're asking about the edges, and it really doesn't really matter. You need to be just in the higher spectrum that they give you. So we don't need to worry that we have to be at the very, very top. We have to be in a place that puts us above, for example, 720. Above that is amazing, but below that, that's when we run into problems, for example. So we really have to really think about things, not about being the very, very best, but being consistent. We have to consistently think about this is a long race. We don't have to sprint to the front. So as long as we consistently make our payments and we have great habits, doesn't matter if they have it at 820 or 7, we are making our consistent payments, and really ultimately that's what matters. That's a healthier way to think about this process.
Yeah. And you covered
Mhm.
this already,
Mhm.
but does paying credit cards off each month bring our credit score down, or is it better to leave a small balance and just pay it over time?
No, keeping your balance at zero is ultimately the best. The small little balance shows or is telling the credit agency that there's something that you're unable to pay. I remember hearing that people used to say, "Oh yeah, you need to have a little balance so they know that your credit is working." No, that's not true. You paying on time and having the lowest balance is what is what's going to make your credit score the highest. It's that balance of being over leverage and payment and how much you're able to use that gives you that credit score and time and history.
Yeah. And Diana, we were talking about all these department stores and, offering you instant credit. Um, if you don't use that, for example, you get it, you pay it off, and then you don't use it, after how long do they close out your account? And I know that impacts our credit score, right? When they close a credit card. So how long do we
Yes.
have before that happens?
So it usually takes about a year or
Okay.
two. The company will let you know, but you still have an open card. And as we spoke about earlier, if you have many credit cards open, that is going to count against you. So you really want to think about once you've hit that third credit card, that's it. So being mindful, that's the other part of which credit cards we're opening matters. These credit cards offer um, cash, traveling. So we need to be very mindful also of the credit card that we're using, which credit card is going to be reliable, right? An American Express versus a Visa. Those are different types of credit cards. So we also need to become knowledgeable of the credit cards that we're using in the companies because they all offer different things. So it's always understand who you're doing business with because that's in reality what is happening. You're doing business with this credit card company and you have the right to review them and choose to open up a credit card. It shouldn't be, oh, you're just getting 20% off and then you open it. It shouldn't be that easy for them.
All right. Um, you earlier talked about our mortgage, right? Good debt and owning a home and paying a mortgage is wonderful. How about when you pay off your mortgage? Does that impact our credit score? Does our credit score decrease if we don't have any more, mortgage? Is that going to, so if we pay it
No,
off?
no, no, because we still have things that we're still paying off, right? We still have that credit card. We're still living, we're still using our credit. It's great that you pay it. It's great having the mortgage because it is an easy way to show that you're habitually paying. So if you're always paying on time your mortgage, easy. And the other thing that I tell people, we are always able to make automatic payments. It's a very good tool to use. I use this all the time because I have children. So I have children. I have a job, and I have myself to deal with. And I honestly cannot remember if the water bill is due on the 15th, if the credit card that I'm using for so and so is due on the 10th. So everything has different due dates. So it's so important to just do an automatic payment. But when we get a new credit card or we lose, it's important to call these companies and update them. So I actually have written down all the places that I do have to pay, because, and their phone numbers ahead of time, because there is going to be a time that I'm going to get a new credit card and I do need to update them because I don't want that balance to balance because the credit card was no longer valid, because valid or not, it still counts against you.
All right. Um, Here's a question. Is a credit score influenced by the amount of money we have in the bank? For example, if you have to dip into your bank account, is that going to affect your credit score? Is it going to decrease?
No, no, these, um, what you have in a bank only it lets you know how much you could pay, but that has no bearing in your habits. There's people who have a lot of money but never pay their debt. They will have really low scores because that's a bad habit. They're not able to pay their bills on time. Have it in a bank or not, it doesn't really matter. What matters is that habit of you paying on time, having low amount due. Those are the things that matter.
Yeah. And how about those of us that are getting ready to retire? When we retire, is our credit score impacted? Will it change the fact that we don't have, a job? Uh, I see you nodding.
No, no,
No?
no, no. It really is interesting because one of the things we always think when we're really young is it impacted because I'm young or is it impacted because I'm old? When you're young, you don't have the history, but that's not the same as having bad habits. You're just building it. And as when you retire, I've never had a client come back to me and tell me I've retired and my credit is down. That has never happened. It is a natural concern, but the agencies aren't really worried about your age. You're worried about can you make that payment and are you reliable? So as long as you pay, you're fine.
Yeah. And for those people who just joined us, of course, I mentioned it's being recorded, so you'll be watching and you can listen. But Diana asked us to check at least twice a year, right? Our credit score, because credit affects not only you getting loans up in your limit in case of emergency. You may need, to increase your limits. Who knows? Hopefully you won't need it, but it's good to know it's there. Your landlords, if you want to buy a car, if you're going to get a job. I mean, just, like you were saying, it's an indicator of trust, right? Are you a trustworthy person? It's kind of like a very quick way people know about you
Yeah.
just by, through your
I always
credit.
kind of think about it socially, right? If somebody lies to you, that kind of goes down. I don't really
Oh,
trust you, right?
yep.
Lies to you again. And then it goes down, down, down. And the same thing, credibility and credit score with somebody. It's important to not lie to somebody. So it's important to make the payment. And these companies kind of see it kind of, it's in that manner. If you are able to make those payments, great. If you lie to someone, the credibility is going to really go down. But luckily, just like our credit, we're able to build it up, but it's going to take time. Our trust is going to take time to build. And it's again with making consistent payments or consistently not lying to someone. That's how we're able to build it. And it's the same thing with these agencies. They just want to be able to trust you and know that their money will be paid back.
And Diana, the other thing for checking is, of course, to make sure that we haven't become, fallen victims of fraud, right?
Yeah.
But a question came up that what if someone was scammed and their credit rating was destroyed? What can we do to rebuild it?
Yeah, so there are agencies that do help you rebuild your credit. There you will have to go through the fraud process with all the companies that these people, individuals dealt with and took your money with. Some banks have this. A lot of financial institutions have this type of assistance, but you are going to have to build your credit up. And this is why you need to be proactive, because once that plate is broken, it is broken. So being proactive and understanding your credit and where you're at, the best. Because if you leave it alone for years, these people are consistently going to be taking loans and doing things against your own will and benefit because they honestly really don't care. So if you would catch it, the less damage that these people are going to be able to do to you.
And Deanna, is it a good idea to hire these credit repair agencies if, you know, if our credit is so bad, or is that something that we can do on our own?
I will always tell people in that particular situation, you need to speak to a financial person. You need to speak to someone like me to really understand what's going on. Anytime that you have an issue, it is so important to speak to the expert. If you have a financial question, go to your financial institutions, go to your financial advisors. We're the ones who can sit down with you, look at your situation specifically, and give you the advice that you specifically need. Giving advice, broad advice, with such a specific question is not usually things I feel comfortable saying because there's a lot of things that we could do. If someone is in that situation, go on ahead, speak to a financial advisor because that is something that we do deal with, certainly.
And Deanna, is there like a ballpark timeline? Let's say if we're saying, okay, now, something happened and I do need to repair my own, credit rating, my own score. Like how long would that take? Does it take like eons, years? Can we do that, this year?
Depends on the damage done. So it really depends. This is why it matters to be very proactive about it. If it's something that's only been going on for 6 months, the likelihood of it taking a long time is much less. But if we have, some people have bought homes against somebody, have used their social security, and that's a damage that is going to be very significant against that person. So it is important to really see your credit score, see if it's current, and if it's not, speak to a financial advisor because then we're able to direct you where you need to be and give you the tools that you need.
And Deanna, I know that we keep telling people, check your credit score, check your credit. How do people really go about doing that? How do we check our credit score? Where do we go?
Yes,
And
you
and
could check
is it
it.
free? Does it cost anything? Sorry, go ahead.
No, no, please ask. I love it. You can just check with your banking institutions. You could also go to Experian. They also give you the list of your credit score and any debt that you have. You're able to see your whole history and see if you have any credit card debts, if you have any debt that has not been paid on time. You're able to see that. And you could check it as regularly as you can. It is free, but if you want more information or if you want to be notified of any changes, then you can sometimes pay extra because those notifications are very helpful. And sometimes for people who can be forgetful, who forget, oh my gosh, it's been 8 months and I haven't even checked. Well, if you have this agency giving you monthly reports, and if that is something that is helpful to you, then yeah, you could certainly pay for it. But just doing a random check, you don't need to pay.
Yeah, I mean, it was interesting. When I first started checking, and all of a sudden I started seeing all these crazy credit cards, right? When you're young, right? Getting these credit cards that I even forgot I even had, and they were there or they were being closed, and I mean, when you don't even know, and then later I had to be making calls and try to, fix all that. But it was interesting. It was very eye-opening how you feel like, something so random, but it affected my score.
Yeah. And this is something I tell young people, college students, for example. So I'm a parent and I will be a parent of college students, maybe, hopefully. Um, these colleges sometimes invite credit companies to come in and they'll give you a free shirt, for example. That's a very expensive free shirt because you sign up for it
Yes.
and then you use it. And typically, you don't tend to be so timely when you're younger. And you already opened up a credit card and you go to the next booth and you open up another credit card. So it starts those bad habits. So early
Oh,
on, you need to express to your children or to anybody that you may know, you know, nothing really is for free. You don't really need that shirt, just like you don't need those pants. Don't sign up for it.
yeah. And right now you're talking about talking to your children. So important, right? To transfer your financial knowledge to your kids because you're absolutely right. I remember in college, I mean, the credit companies were lined up and everybody just throwing right mugs and t-shirts and hats and you would just see the students going for it. It was crazy how vulnerable, but we were just prime for the picking. Most parents weren't sharing the information with us.
Yes. And I also want to add that you need to, if you're a grandparent, if you're a parent, aunt, whomever, you have the ability to be an influence to an individual and let them know. Look up your children's credit score, look up their social, because some people do use your children's information. And since they are not going to be using it for years, they're the best victims because
Oh,
there could be
absolutely.
years of this
Mhm.
happening.
And they'll sell it and resell that information.
Mhm.
Absolutely.
Yeah,
And
fraud is awful.
uh, then as you pay off credit cards, does it seem as if your credit score decreases? No.
No, so as you pay the credit card, um, that is how you're leveraged, right? You're not overextending how much you owe. That will eventually get your credit score higher and higher. So the closest you are to that zero that you owe from your credit cards, the better for you. That's ultimately the goal that you want to be at, is it's that zero monthly dues.
And here's a question. Is it wise to have credit freeze and a credit lock with the three credit rating agencies?
Depends why you're doing that. Why is the individual wanting to do that? Is it because they can't pay the bills? So we have to sit down and really talk about why this person or this individual may need to do that. So that whomever asked that question, that would be a question
Yeah,
that I would have to sit
yeah.
down
Uh,
and and see.
Explain, what is it? What is a credit lock or a credit freeze?
Well, if you are seeing that somebody, for example, is taking your credit card and you don't know if somebody's using your social, you can do a credit freeze. So then they could do a fraud investigation.
Oh. That means your credit card cannot be used anymore? Or,
Correct, correct. Well, and it depends if you're doing it through the Experian or you're doing it through your credit card, because, for example, some people use that word loosely, and this is why I say it depends, because some people just stop their card because they lost their card and they think that that's a credit freeze. That's not a credit freeze. You're just freezing your credit card because you lost it. So that's different. So I always like to have that individual speak to me and understand what they mean by that.
okay. Um, and a follow-up question, do you check all three agencies or is one better than the other? And one credit resource allows one freeze for one credit card agency for safety.
I usually, when I do it, because I don't want it to be my whole life. I don't want it to be, every month I'm checking three. I'm not gonna. do that to myself because it can be overwhelming to be checking all three at all times. I would choose one and choose that one and do that maybe once a month. But yeah, maybe that 6 month marker, check all three of them, see where you're at, because that's okay. Because you want to be, all this is about creating habits, but not becoming so involved with it that it becomes problematic for your own lifestyle. This is just about understanding where you're at, understanding your budget. That's the other thing that I cannot overemphasize is understanding how much can you actually um, receive a loan for, because there's times that we are emotional and we want that car and we say, oh, I really want the car, so then I won't go out to dinner so many times and I won't buy so much clothes. If that's the type of mindset that you're starting to feel when you need to get a loan, then you need to revisit. Maybe you should not buy that car
If you're
because
that strapped, right?
if you're that strapped,
Yeah.
because eventually we are going to go out to
Uh,
dinner and eventually we are going to do things because we're people. So then you've created a bad habit and you put yourself into a bad situation because you didn't understand that really that debt was not a very feasible debt for yourself.
Deanna, does medical debt get reflected in credit scores?
Yes, it does. Not all hospitals reflect this. There are some hospitals, and you can ask these questions to the financial advisors of that hospital. Do you report this to the credit agencies? And if you do, does it count against my credit? Because there are some that do and some that don't. It's not just all or nothing.
All right, so we can talk to the finance department and make arrangements just like you would negotiate debt, payments.
Well, I mean, some institutions don't report it to the credit card agencies, and some do. And even clinics, not just the hospitals, but also small clinics. Some of them run differently. So it's a great question, but you cannot assume that they do or they don't.
All right. If we have not checked our credit score in years, can you still request a report to be mailed? Or do credit card companies just email or PDF or what do they do?
Well, you could request it to be emailed, but you could just check it online. Things are pretty
Yeah.
accessible now.
But
Yeah.
I'm sorry, would they be mailed? Can they mail something to you?
Yes, they can.
Okay. Oh, perfect. Um, and let's see. The other thing is, what if, I know you mentioned the magic three, right? That we have three credit cards. What if we go beyond those three credit cards? What should we do with the rest? Should we close them, let them be, let them die a slow death? What's the strategy here?
Yes. So pay them off, first off.
Yes.
So please don't use them and close them. Yes, go on ahead and be proactive. Your financial wealth and being takes, it's you being proactive about your financial decisions, and you could take control of all this.
Should we do it like one at a time or Band-Aid and close them all? Is that going to impact our credit?
It's going to impact you to have them open.
Oh,
So having them open is already impacting. So you should close it.
okay.
Have those three, because the companies no matter if you use them or not, you're still being over leveraging yourself.
Yeah. And someone has been receiving many credit solicitations. How do we know if it's a scam? How can we be sure it's not a scam?
So I get these all the time. Most of the time, if you get one from American Express, open it up, read it, call the phone number. If it's from a banking, you could go in person. There's even people, unfortunately, who do fraudulent and they say that they are the banking institutions. So if you're able to go in person, for example, a Chase, go into the Chase. and ask, is this something that you guys are offering to me? If you're able to call, go online, check the phone numbers, check the contact information. Does it match? Because people are getting really, really good at being fraudulent. And especially now with AI, things are getting even more and more difficult to actually know that they're fake.
Absolutely. Emails that look exactly like it's coming from your bank with this incredible offer. And then you just start seeing you're right, that there's some typos or some things, right, just to make it.
Oh
Uh,
yeah, even like sometimes I receive emails saying that, oh, you bought this, please call this phone number from Amazon.
yeah,
And then they give you this phone number that you call. No, do not do that.
right. Yeah, but
Amazon is not going to do that for you. But again, you should also go online and see what are the current frauds, the current things that people are doing, because you can look that up too. So it is so important to understand what people are doing, understand that if something feels wrong, it probably is. And if you really cannot know, ask someone. Ask your financial advisor. Ask someone that you trust, is this legitimate? Because then we could look it up and see for ourselves and do the research.
Diana, where can people obtain more information? Can you recommend a few resources where people can, get more info?
In regards to credit card,
Yes, just, credit, managing your credit, managing.
yeah. So, well, for example, I am able to provide that information. Um, AARP is able to provide information, the credit agencies. So it's again, not where is who. Speak to someone who has that information and they're the financial people, and those are the people that are going to be able to help you. Just randomly looking things up can get you into a slippery slope of information that may not be correct. So
Absolutely.
speaking to the expert is ultimately where you want to go.
Yes, and Dana mentioned ARP. You can, of course, access a ton of online resources to help you with your financial stability. You can visit aarp.org/money. aarp.org/money. You'll get a lot of information there, even including how to find a financial advisor, how to manage your credit. I mean, just a wealth of information. Diana, if there was like one recommendation, one tip, one final thought, what would it be? What would you like people to know?
Yes, I cannot express how becoming knowledgeable about your current situation is understated. Become knowledgeable, open up that credit card, open up that credit experience,
Oh,
and
that report.
understand your review, understand where you're at, and never hesitate to speak to someone who knows. Not knowing is not the problem. And there are so many people out there that want to help you. It's when we don't ask that we get into problems. When we don't know, when we're ashamed, there's a lot of things that we're expected to know. No, you're not expected to know. Um, you're expected to maybe ask someone, and then that expert can move you forward, right? Empower yourself with action, empower yourself by reading and becoming knowledgeable for the things that you want to get.
Perfect. And I know this is the end of the month, but April was AARP's Fraud Prevention Month. And falling victims of fraud is a huge concern for many of us, considering how aggressive and devious scammers are getting. It's just sad. But to learn more about the AARP Fraud Watch Network and how to proactively spot scams, please check out our local events at aarp.org/fraud. I'm sorry, local fraud events. So, tons of information. And I also want to invite you to join our Let's Talk Dinero segment. And that's specifically on tackling identity theft, which is Oh my gosh. It is awful. But please, you can check that. It'll be taking place on May the 4th at 5 p.m. PST. Once again, let's talk Dinero segment on tackling identity theft. Oh, the information is already on the chat. So please, it's going to be May 4th at 5 p.m. PST, and you can just register through that link on the chat. Um, but Diana, thank you so much for all your wisdom and expertise. You've shared your contact information. So please do so on the chat so people can contact you directly if they want to. I want to thank everybody for joining us and know that we have our next Let's Talk Dinero segment on Monday, June the 22nd. So Monday, June 22nd. And we're going to be talking about how to start your side business, right? Everybody's talking about side hustles. This is your opportunity. And let's talk Dinero. We cover everything about money, debt management, credit, investing, retirement planning, entrepreneurship, and so much more. Once again, go to aarp.org/ let's talk dinero. Thank you so much for joining us. Goodbye. Buenas noches. Diana, thank you
Thank
so
you.
much. Appreciate it. Thank you all for joining us. See you on June the 22nd.